The primary purpose of this podcast is to educate and inform. The views, information, or opinions expressed by hosts or guests are their own. Neither the show nor any of its content should be construed as investment advice or as a recommendation to buy or sell any particular security. Security-specific information shared on this podcast should not be relied upon as a basis for your own investment decisions. Be sure to do your own research. The podcast hosts and participants may have a position in the securities mentioned personally through sub-accounts and or through separate funds and may change their holdings at any time.
Welcome, everyone, to a new episode of This Week in Intelligent Investing. Great to have my co-host, Elliot Turner of RGA Investment Advisors. And great to welcome back our special guest, Daniel Prather of Crossroads Capital. Today, we're going to be talking Google Antitrust. Elliot and Daniel have a fascinating back and forth. And to get it started, I'm going to turn it to Daniel.
Yeah, sure. So about a year ago, I think right before the beginning of the search trial, we put out a thesis basically saying, hey, everybody, I'm sure that's very interesting. The search trial is very, very important to many different stakeholders, but it's a coin toss, we think. But for investors, we think you should be kind of focused on the second trial, which is the ad tech monopolization trial. And in there, we basically said, along the lines of there's a much clearer path to damages and remedies with a lot less sort of legal nuance than you would think versus search. And we laid out the thesis of, here's all the damages that have been done. There are numerous things. This is how they've, monopolized the ad tech space. And, here's how we think things are going to play out. And then there's a handful of beneficiaries of that. And basically along the lines of there have, anyone in the ad tech space over the last 10 to 15 years, it's always been kind of in the back burner. Google, they put their boots on our throat. Anything they do, we take some kind of damage. And it's generally been a very poor sector to invest in. And so with, a sort of legal framework and a possible breakup, we kind of lay out, what the future could look like for some of these people where all of a sudden you get some alleviation from that. It's sort of a very sort of, there are numerous sort of hoops to jump through. First, you have to get past the fact that when we published this, of course, many people basically said along the lines of, well, it's never really going to go to trial. They'll settle something. There'll be a fee or a fine. Or if they do, they're not going to win and things like that. And so far, for numerous reasons, which we'll get into, is Google has lost every single lawsuit, antitrust trial that they have gone into. There's been two thus far. The Google Play Store, which got concluded last December, and then the search trial in August. And right now we are sort of pending on the ad tech trial. And that should be remedied. That should be come out very soon. And there's a couple of different ways that this will go. It's going to be very different from the search trial. So with that kind of framing, we're going to kind of just chit chat a little bit about, one, the thesis, where do we think, where did it start? Where's it going? And how late into the stages are we? So getting to start with it, starting with ad tech really is 2008, Google bought a company called DoubleClick for about $3 billion, cleared FTC, it cleared all kinds of sort of legal and regulatory hoops and everything else. And it basically doubled their market share in the sort of supply side of the market almost overnight. And the way that the industry is sort of structured is there's sort of three different tranches. There's sell side, there's the exchange, and then there's sort of the buy side. And basically, after they dominated the DoubleClick, the supply side, the ad server side, that basically gave them 90% share over time in that one part of the industry. And from there, they have basically sort of corralled every other part of the ecosystem all into one. So if anyone's going on the web, 90% chance that you see an ad is the software and infrastructure that is sort of hosting that and powering that is Google. No one else really has a choice on where to go. Well, that's also, not necessarily having a monopoly is not necessarily a problem. It's monopoly sort of maintenance is what it's called, and that's what they're arguing right now, which they're probably going to lose. So what it is basically they've done things that they shouldn't have done in order to keep that monopoly. So M&A is one thing, and getting a large market share is another. But there are numerous instances, and we lay this out in a couple of our pieces as well, as they would purposely change auction bidding rules, which is where sort of the ad server is so beneficial and why it's so important, is basically all the auctions were run inside this tech. And then basically what they did is they would change the rules and it would affect all these other players, and literally overnight some competitor would lose 20% of their revenue overnight, and they wouldn't know why. It was just something that Google basically had some algorithm they changed, whatever, and they were able to kind of manipulate the market and get a last look and things like that. And so this has been going on for, started off in 2008, but really took off into in 2015 or so. And all this is, all well and good. But what was really sort of interesting here is, the lawsuits started in 2020 with the DOJ basically starting with the search trial. And then in 2023, they came out with the ad tech one. Now, what's interesting here is we can get into the search trial, but it's a very different situation there. Is basically this is two different trials put together. So the first trial was for determining sort of legal liability. And then the second one, which is ongoing now for the search trial, is for the remedies. And so people are seeing what the DOJ is suggesting. So what's going to happen there is basically over the next 6 months, they're going to have another trial for what they debate is what the damages should be. What should fix the competitive situation for Google search. And there's a lot of different sort of legal definitions on what should technically be looped under remedies. But basically, Section 2 of the Sherman Act says that that the courts have sort of wide sort of authority to mandate anything as long as it fixes the competitive side of the market, and also they can basically do anything along the lines of the fruits of the anti-competitive monopoly. So, for instance, the search trial ended with the monopoly in search text ads and what have you, but Chrome is being considered as a divestiture or spinoff in the search trial. There's also a possibility of divesting Android. And then, of course, there's data sharing arrangements for search and AI. And basically, it's like, well, the conversations that come up is basically along the lines of, well, that was not actually in the lawsuit. Why would that be considered? Is because of the interconnectedness of all this as well. And of course, the judge can basically say along the lines of, well, that's also still you benefited from the monopolization of one side and you were able to sort of add to it on the other. So technically, you're still allowed to sort of spin off, or that's still allowed to be remedied. And so we've got that going on in search. Chrome somewhat affects the ad tech trial as well. And so in the ad tech trial, we've got a handful of players here that are direct beneficiaries from the business being unwound. And what's interesting here is that's not only just the case for it's not just interesting for ad tech, but for Google itself. A lot of the sort of new theses that are coming out there is, well, spinoff and divestiture and breakups would be great for Google. It's pretty cheap. Every other breakup story we've had, from we'll call it Standard Oil and AT&T, this, the stock's gone up since then because it's, discovering value, what have you. And this is, I think, a part where we're like, it's kind of where we're not, no one knows until it really happens, but we kind of err on the side of caution here because we think there's a couple of simplistic mental models that are kind of being applied here that may not work well going forward. So, for instance, this is a very interconnected business. I think there's a couple of interesting data points that show that just how a network effect business being unwound can have some unintended consequences here. So Google back in the day used to have each of these businesses as separate items, really, up until about 2016, 2017. It was not until they basically had a project called Project Narnia that actually kind of linked all the data between these different silos, and they were able to kind of get a CPM boost. So if I'm searching on Google search, there was a time where all that data was basically just kept at Google search. It was not used at Gmail for delivering ads or YouTube or anything else or on the web. But when they when they started linking all these things together with Project Narnia, all of a sudden you've got the ad tech business sort of being this interconnected tissue across all these different businesses. So what happens when you rip it out? Network effects, you always get the 1 + 1 = 3 on the way up, but what do you get on the way down? And so we kind of postulated in our first write-up in 2023 that, this Project Narnia is going to actually be a bit of a problem with them. It's why they haven't spun off what they call an inferior business so far, is that ad tech business. It's only a small portion of Google in its entirety. And so fast forward to today, all the court documents have come out over the last 6 months with the ad tech trial in Virginia. And, you've got YouTube executives commenting on changes in the ad tech algorithms because it affected their CPMs. And that kind of points to this interconnected issue here, which is if you do start breaking up parts of Google, that data that's being collected everywhere else in other parts of the businesses to support maybe higher CPMs at YouTube or what have you, start getting undone, and it starts impacting and impairing the business, and it's actually kind of been over earning. That's not to say there'll be other assets like Waymo or what have you. They're basically, just kind of sort of stranded assets. But the network businesses, which is, search and YouTube and the ad tech business, kind of all interlock in between each other. And, could that be a problem for Google shareholders? And that's kind of where we're coming at. More caution on some of these frameworks on where Google could go post breakup, what's going to get broken up, TBD. But in ad tech, we can very much put a ring fence around that. There's just a handful of assets. They're small compared to Google as a whole. They're much less likely to fight over it than search. And also the trial is structured differently. The ad tech trial started in 2023 with discovery and everything kind of concluding earlier this year. And then the trial had closing remarks just a few weeks ago. And the judge in the Eastern District of Virginia is known as the Rocket Docket. So the judge is going to rule here pretty soon, probably just after New Year's. But remedies will also come pretty much immediately. And then what you've got here is for ad tech, you've got a second trial starting in the Eastern District of Texas next year, which has been much more aggressive in discovery and what have you. And so sort of the tea leaves here is that they're going to fight in appeals and everything else on the search trial. And that could indeed drag out for another year or two. But with the ad tech business being smaller, and then these two trials, is they're much more likely to play ball or try and sort of jockey for keeping as much of what they can with search. So we would expect that the conclusion to the competitive environment in ad tech is going to come a lot quicker than people think. Um, and it will have a bigger impact than most people think as well. I can get into some more details there, but I'll just kind of stop and let Elliot or John chime in.
Yeah, so really helpful job setting this up, Daniel. And I think you raised some very interesting points on what the ramifications could be, some key questions and differences with how prior antitrust resolutions have gone. And, really, I just think it's so interesting. By way of background, I think it's worth mentioning in October of 2020, we did a podcast here on This Week in Intelligent Investing, and I talked about some lessons I learned from Steve Cole's book called The Deal of the Century about the breakup of AT&T and how these processes are never as simple nor as straightforward as would appear. And antitrust is very much a process. It takes a certain zeitgeist, it takes a certain effort, and there are legal boundaries within which people have to work, all alongside actual negotiations between the entity that brings the antitrust action and the company that's subject to it, as well as any other related companies. So the AT&T action was kind of provoked by MCI seeking access to AT&T's network for long distance. And ironically, at the end of the day, it actually was quite harmful to MCI's business once there was a resolution. It became far more expensive and complex to compete once pricing was opened up for access to the network, and the short haul carriers of AT&T were effectively spun off and created as competitors. And it wasn't actually the intent originally to break up AT&T. That was in some ways a solution that was put forward by AT&T itself at one point in like the parallel negotiation to driving a resolution. So, this idea that there are these other ad tech companies out there who might stand to benefit in a breakup. I do think one of the interesting consequences is generally thinking about antitrust action as somewhat backward looking. And I think you could think of it both in terms of search and in terms of ad tech. Like ad tech itself has maybe never been as competitive as it is now. You've got the Trade Desk offering a very large, like open web alternative that they talk about pretty regularly, and you have AppLovin, which is growing very quickly. The whole Meta family of properties is a very large competitor to Google and subject to its own scrutiny, if you will. And so the fact that it's backward looking doesn't change anything with the intents of the FTC, but you also have what very well might be a new FTC coming in, and that won't change what's happening in these current actions. But it does make it really hard and challenging to figure out what might be an accepted resolution in a negotiated way instead of like coming out to the courts deciding. I think it's notable that in the Google Play loss, the outcome was not nearly as significant for Google Play or for Apple because it had consequences there as might have been perceived. And I think that one, the grounds were even clearer for really sweeping and aggressive action. In search, they didn't actually say sell Android. The Chrome sale seems like a bizarre piece to push for because I'm not really sure how you separate Chrome from the Google business and what actual benefits that brings. But at the end of the day, like this idea that Google is this series of interrelated businesses, yes, but they all could be broken apart. And I don't necessarily think, like, let's say Google with Narnia, right? They had the benefit of saying, with YouTube, you're bidding for YouTube ads and we're leveraging our data from search and vice versa. And they also started packaging bundles. So if you're an advertiser, they kind of steered you to advertise across properties as opposed to pick one and one only. Were YouTube to have to think on their own, it's certainly plausible they'd find better ways to drive better outcomes on YouTube properties themselves. So that's even if this whole world were to shake out as you're suspecting it might. The broader point I'd make, though, like the kind of tie together of all these, starting with MCI and getting to what might or might not happen, is that the unintended consequences and the unpredictable tend to be the most meaningful pieces that emerge from these kinds of actions. And those are very hard to know. And what's interesting is that with AT&T, I think the most observable lesson for the future is you take an organization that had one corporate imperative, which was to grow, which was just to take advantage of a dominant market position and grow AT&T itself, and shake up what their essence is and create this kind of experiment in how you reformulate what a corporate purpose is. You take like a sleepy organization that's not optimized for good product, good customer experience, good service. Suddenly that trifecta becomes a priority and the business itself gets better at the end of the day. And so I think, one of the realities with Google is they've never been positioned to optimize for margin as a business. I think partly for fear of avoiding antitrust action. Now you have antitrust action and they have cover to say, hey, like, let's actually make money. And you have all these questions and it's like, how do we make our product better? How do we reorchestrate our North Star as a company? In the IPO conception of it, it was don't be evil. Now, I mean, arguably, some people would say some of these actions are evil. I don't think that personally, but you don't necessarily have a clear corporate imperative. And on the other side of all these antitrust actions, bringing some closure to it, I think you do get a very clear corporate imperative from Google. I do think you get a very clear mandate to make some money. And whether it's as like one company going forward or several different companies, I think the outcome is going to be for the better here. So I'm curious, Daniel. That's how I'd lay out my kind of pseudo response. But
No, I like it. So I'll start with on the competition side of things because I think that's honestly been a very important part of both the trials that the DOJ or both the suits that the DOJ has brought. So competition here is we are defining for ad tech is open web advertising, which is very different than the mobile that Meta's in, and some of the stuff that AppLovin does, and even Trade Desk and CTV and a few others. So this is actually only a subset of that whole market. And in the trial, actually, it was kind of funny. Google put out a graph that showed here's the open web advertising ecosystem. They didn't want to put actual numbers around the total addressable market or the revenues specifically into those. They'd much rather they presented sort of the total, which included competition with Meta and everyone else, which was the judge actually kind of took issue with. Basically, you're showing me open web here in pictures, but not anything in the numbers. So that's because it's so utterly dominant in this one particular part of the advertising industry. But that graphic showed lots of competition in terms of players, but in terms of actual sort of market share, I mean, completely and entirely inconsequential, really. They're really just kept there because they've managed to eke out a living because advertisers and publishers on the web didn't want to be entirely beholden to Google. So they had a small part of their business basically for the independents. And so it's kind of always been a throwaway part of the business where in the thesis we brought up, Magnite, Pubmatic, Trade Desk, and then there's a handful of others. Full disclosure, we've been long Magnite for about a year now, and as per the thesis as well. And so, there's the idea of competition, yes, but they're not really competitors of anywhere close to an MCI and AT&T were. This is they're all there, but they're completely inconsequential. So I thought that's just an interesting part of where the sort of lawsuits have gone. Is it brought up that same kind of those same kind of issues that really a lot of people point out that if you look at the total advertising, it doesn't quite fit. As far as corporate organization and what have you, is yeah, absolutely, that's more organized and aligned business, maybe better off and things like that. For this particular instance, we're just simply pointing out that there's a lot of people on one side of the boat, and typically these things are a lot more, like you said, a lot more complex than that. And so we're just pointing out in particular for Google shareholders that there's other risks here that shouldn't just be sort of hand waved away. The interconnectedness of data sets and network effects here are even more pronounced. This has been called the greatest network effect business in the world. So what happens if they start splitting stuff up? So on that point too, I think you brought up a great point. Is why is Chrome being even dragged into this, or Android, and maybe a couple others? You called out Chrome in particular. Well, this has to do with query scale. Is by owning Chrome and Android, that's a lot of the search input for their business, right? Those are the gatekeepers there. Everyone's doing it on an Android phone, an iPhone, or the computer. And usually it's through Chrome. I think everyone here basically ditches Internet Explorer and downloads Chrome, more likely than not. And so what the courts are doing is basically I see a lot of sort of takes on this as well, and I think it's very much a stock analysts and business analysts are trying to evaluate on a business on a business level, when simply regulators are looking at and the DOJ is looking at what are the barriers here, and how do I remedy that? So in this case, you've got a handful of avenues into the search market, of which Google controls pretty much all of it. Or in the case of the iPhones, they're paying $20 some odd billion a year to Apple to keep that to channel those search queries, which then compounds their ability to sort of have a better algorithm, a better search product, supposedly. Of course, we've all seen, search also is degraded over time in terms of quality, which, it was brought up in the trial, which so coincidentally is also, the AI algorithms and things that people use it for search now as well. Is, does that change some of the dynamics there? Yes and no, and that's what's going to be really interesting to come out of the remedies trial that's coming up. But basically along the lines of, these guys are trying to say, what are the problems to this market, and how do we open that up? And that includes a handful of things. So Chrome and Android being one of them. I think, if we were to kind of lay out where we think search is going to go, of course, we have a much stronger opinion on ad tech. But, some of it does also, again, to the interconnectedness of all this, some of this does impact the ad tech business as well, and those competitors. And so what we've got with Chrome is obviously a lot of auctions, and open web is through Chrome. They're collecting a lot of data through third-party cookies. And, third-party cookie, we can get into third parties and first parties, but basically, tracking everyone across the web. And Chrome is able to do that, which then, drags in the ad tech business, you get higher CPMs with better data. So that's that element of it. And then you've got, okay, so the escalating parts of this situation here is, I think first and foremost, what was argued in court was the payments to Apple would be a problem. I think it's a very interesting problem for Apple. For instance, if they have to pull out, they don't receive $20 billion a year in profit. I think that's something that very much will happen. I think they're going to run into, that was argued in court. That was very clear. I think that's part of the problem. I think we could see remedies that would probably address that. And then you'd have, if you have any escalation from there that they're not able to Google's not able to sort of bat down, is Chrome, and worst case would be if they have to divest Android, if they're kind of told to. Of course, all that's kind of TBD. It's kind of interesting sort of thought there, but I think at the very least, when we think about search remedies, I think the ones we got to play out first are those to Apple. And that is technically still a benefit to Google. They don't have to pay 20 billion anymore, but also that was 20 billion that Apple got in, basically, call it not free money, but just about. They're going to start up their advertising business probably after this as well, depending on how this goes. And some of the sort of tea leaves between what the DOJ is doing, and basically it was almost as if they wanted Apple to compete against Google in the search market. So I think that's something very interesting there. So I'll just stop there and let you ask another question.
Yeah, so I think you raised some interesting points there that I'd love to maybe push on, but also add a couple of thoughts. The Apple point, right? It was even broader than that. They're almost suggesting that they don't want Google to be able to pay traffic acquisition costs, TAC, that they talk about in their earnings. They want Google to have to earn every impression they actually generate. And you kind of went to the Internet Explorer versus Chrome point, and I think that one is a really, really powerful one, because that's not what's covered in this particular case. And ironically, it was the push to get Internet Explorer out there that got Microsoft in their own antitrust trouble way back in the day. But like you said, people ditch Internet Explorer and download Chrome. That's kind of the point, and it's like one of the counterfactuals that's really hard to demonstrate in this case. So let's say we do get a world where Google can no longer pay Apple the $20 billion to be the default search engine. What does Google's market share and margin structure look like on the other side of that world? And we have good evidence with Google's browser share on PCs, where Microsoft has Internet Explorer and Chrome is not the default, that it would still be pretty damn high. And interestingly, they might not have that $20 billion payment that they got to pay to Apple. Now, it's really hard to prove what a counterfactual will look like in advance. And it begs the question, why does Google pay that $20 billion at all? Why do that if you don't? And we're talking about a data-centric company, a company that has great data on the world and itself. Why would they pay that if they didn't believe they were generating a return on it? And, make fun of Google all you want for not being a return-centric business. I think in this particular facet of their business, they very much are focused on returns. This is different than one of the other bets, if you will, where you could make that allegation. I think in some ways, the design is to keep competition out. But if you're Apple and you see Google facing pressure for steering people to their own default as search engine, and you have other dimensions of competition, well, Apple, you yourself, you're probably not going to be the one to develop competition. So who else is out there? There's really not much in search itself that would be, I'd say, not just capable of paying high sums, but a good enough product experience that Apple would want to choose to let them pay to be a part of it. So I think that's an important caveat here. And so, then you talk about trying to distinguish like a fairly narrow definition, I'd say, of um, advertising, talking just about the open web and excluding something like CTV from that, because I think it's very relevant insofar as like a Google property like YouTube is concerned. And as far as mobile apps are concerned, because I do think there is this kind of like splintering of what you can define as the web. So like YouTube is one of the largest, most significant CTV properties there is, but it's also a very large web presence itself. Trade Desk advertises across the open web. They advertise on CTV. Their data is deployed similarly in both. I don't think you could run a business thinking about each as discrete areas. And I know you could maybe have a boutique offering that caters to one or the other, but that's one of the challenges. And I think to a degree that's part of where you're right, in that there's a network effect that happens on the ad side, and there's a halo that crosses properties and crosses media. But they do benefit from multiple layers of network effect. They have network effect on their core mapping of the whole web, network effect with user scale, network effect with advertiser scale. And I don't think changing the rules of the game necessarily imperil any of these network effects because they're so damn powerful. And then, you talked about people that are along Google. I do think, and how they're all on one side of the boat. I'd say it's pretty interesting how Google is valued relative to other very high barrier to entry, high performance businesses. It's definitely got a bone to pick on how the market treats it, and it's probably had more terminal value risk priced into it than just about any equivalent property. And it's debatable the degree to which that comes from antitrust scrutiny or OpenAI ChatGPT today. But arguably, this terminal value risk has been priced in even before OpenAI came on the scene. So it probably has something to do with this antitrust scrutiny. And, I'd still fall back on my point before that this kind of scrutiny, it's notable, it's present, it has an impact. The outcome, one way or another, will have an impact. But the one certainty I have is that Google as an organization can and will operate differently with more degrees of freedom after this in certain areas, not all areas. But at least they could try to maximize their profitability. So when that happens, I think there could be a little wall of worry removed from the terminal value risk that the marketplace is on it today.
Yeah, and I think no, that's excellent, and I think that's also sort of where we get some confidence in something shaking loose on the ad tech side of things, because what it is it's a smaller part of the business. What that there is that small subsection of course, it all is interconnected, but there's a very clear ring fence on open web. Even if that's somewhat depending on how people use the open web today, and it's somewhat difficult over different mediums. You're looking at the web on your phone or what have you versus a desktop. But that kind of gets to where we think this is all really. We don't think of this as like two different sets of trials or even three with the Play Store. This is really all sort of one, and so we would expect that something is going to shake loose out of this, because they're not going to get away with this scot-free as well. I think there's a big part of this trial, all these trials really, is that in search, the judge said, I'm not going to sanction you, Google, for deleting basically massive amounts of evidence from internal chats, but I'm going to go ahead and rule in favor of the DOJ, basically along the lines of that will be penalty enough for you. Same is probably going to happen in ad tech that's been brought up is we don't really know what they were thinking or what the impacts are, because if there was evidence about it, it kind of was deleted. And so I think there's going to be a lot of jockeying back and forth in what's going to be sort of offered up is something is going to shake loose of this. I think it's very much going to be ad tech. I think it's sort of the least important out of the subset of the two, and that even if there are knock-on effects, it's still everything, search and everything else there is so strong that it probably be a little more negligible for Google. But as far as the players go, the amount of sort of pricing power that they've been able to exert on the ad tech business has basically been 2 or 3x their competitors. And so if you get a normalization there, it's a very wide open field in the open web. And how different will that be for them? It'll be pretty consequential for these tiny little minnows that are actually even party to the lawsuit and were brought up on the in court as witnesses. And so I think that will be like search is very hard to is going to be debated for a very long time in the courts, whereas we think that the ad tech business is going to be somewhat of a clearer shot. And so it will be interesting to see if that shakes loose and what comes of it.
So interestingly, I think you make a good point lumping together the three distinct cases against Google / Alphabet, but perhaps we might even want to broaden the scope of what we call these antitrust actions, because the FTC is suing Meta. They're suing that's got a trial date for April. FTC is suing Amazon, suing Apple. All these are going to be heading for trial within the not too distant future. And so there's just a broader categorical action on the part of the government against our large tech companies. Should we not be speaking even more broadly than just the ramifications of what a Google action might be, and talking about the opportunity for a major shakeup in the competitive landscape for any company that overlaps considerably with big cap tech?
Yeah, no, I think you bring up a great point. So these lawsuits that the DOJ has brought, which are different than the FTC's, FTC being a completely different animal in this case, these were all started with the previous administration back in 2020. And then we've got, the latest pick for the Trump antitrust team is this woman, Gail Slater, who's been, an antitrust hawk. And so actually it's very interesting. The, handful of antitrust lawyers I know in DC were absolutely thrilled with this pick because it's someone who's going to be very tough on big tech, but, very pro M&A and everything else outside of big tech to compete against these larger. So it brings up an interesting thing here as who knows who's going to lead the FTC or how that's going to change. There's certainly been there's a bunch more bipartisan agreement, action, I guess, or really sort of communication across the board. There's you've got senators on either side basically saying if these lawsuits don't change the competitive environment, we're going to do it via legislation. And so, I don't think this is something that's going to go away with the new administration. I think if anything, it might actually increase the pressure. And so, does this broaden the scope outside of just a handful of these guys? I think that's very much in play.
So, some of these other competitors they've already started showing some pretty good traction and success in the market. And you mentioned Magnite as a name, but are there others who you think are really well poised to kind of pick up incremental growth in the face of more constraints on big tech?
So outside of advertising, which has really been the focus of our studies in this, is we really think that that's the next in line as far as scale. And while it's minuscule in comparison, that is the determinant factor in these advertising businesses. So we really do think that that's really the best one. As far as others in the ecosystem, there are a handful of even other browsers. There's one in particular that's publicly traded, Opera, I think is something that's kind of very interesting. Is if you get Chrome that's split off, and of course people choose Chrome for a number of reasons, which gets into also why search is so difficult to sort of handicap this. There's a degree of personal choice in that as well. But what different sort of business models really shake loose here? You have operating businesses that are just browsers that generate their income from advertising or paying users a small fee based on the data that they even generate. Those are a handful. Those are some things that could happen. But there's a lot of other sort of smaller media entities in the world that could also technically benefit if there's less sort of data collection on one side of the market through third-party cookies. So let me back up. So there's an interesting element here that's been going on with Google as well in the UK with the CMA.
I was about to bring up the cookie thing as well too, but go on.
Well, we have a little bit of a tea leaf sort of reading on that too. So basically, the way it works is, you go on the web and the browser drops, a tracking device on you basically. And as you go to different websites, it collects all that data. And then it's basically sold to all kinds of third-party people, or if it's, just Google, it's used internally to basically target ads to you. The more targeted the ad, the more valuable it is. So the value, the price goes up. Google's been in a catch-22 for several years now with the UK CMA, which is their sort of FTC. Basically along the lines of your third-party cookies, so you collect on everybody, violate their privacy. And so you've got to get rid of it. And Google goes, sure, here's our solution to this. And, problem there is that actually just entrenches further then they start basically it entrenches further their sort of monopoly. And so they're kind of caught between this and, the CMA didn't really know what to do with it either. Honestly, it's been sitting there for years. Is, fix the privacy problem, but then you have a monopoly problem, or I can take a competitive problem. And so what's kind of interesting here is Chrome has been making some moves here in the last several months, which we thought was kind of interesting. Is they actually partnered with a handful of independent ad tech players on their demand side for first party data. So what would happen here is, it's called the cookie deprecation, is they would basically get rid of third party cookie tracking, and it would be then first party. So if I go to a certain website, they collect that data. The publisher keeps that data, and then they have control over that. No one else can take it from them unless they basically sell it. Presumably, that would move a lot of the data collection that's happening on the, call it demand side, the advertisers. All this data was all third party would then sort of flow back to the sell side. And a lot of these players would need sort of their broker and their partner on the sell side, which would be these sell side platforms, of which Magnite is one, to basically corral everyone's first party data into some kind of, get some scale, and then, go ahead and sell that data or monetize it for the publishers, which they have a whole lot more control over. And so we've seen Chrome partner with a handful of these people, including Magnite until last week, for first party cookie sort of, not data sharing, but integration, so that they could basically benefit from direct integration with an SSP. So you almost kind of wonder if while Chrome might be kept with Google or spun off, there are some moves there that would imply that maybe something's going to shake loose on the CMA side of things where they can fully deprecate cookies. And that would allow them, that would only happen if maybe some of the ad tech business goes, that gets rid of the anti-competitive element there. And that would allow them to fully deprecate, and that would also change part of the market.
Yeah, it's really interesting that, I mean, it was really Apple who set in motion the move away from the cookie, and Google was kind of backed into this corner. I think Apple does a great job of speaking from both sides of their mouth of how they're like supportive of privacy, but they really are in a way that's self-serving.
Yeah.
So they love your privacy when it's helpful to them, and when it's, you know, not, they don't really care all that much. But it changed business models. It's a big part of why Meta had those big problems in 2022 beyond just what happened in the tech-centric stock market. And Google was following suit and was slated to get rid of the cookie, but that would have actually imperiled this whole open web advertising ecosystem to get rid of the cookie. It would have basically been only those with first-party data who had any kind of viable data for advertising on the internet beyond brand advertising. And sure enough, the party with the best first-party data on the entire internet happens to be Google, and maybe a close second, Apple. And so what do you then do if you're Google and you make this move and you do it in the name of privacy, but it further kills your competition? I think that's why we still have the cookie with us. And I do think it kind of shows there's some permanence to the cookie's relevance to the internet. But yet there were years spent preparing for the end of the cookie, and other parties did build out better first party data sets. If you've noticed, way more sites, way more places require your email address as a way to play ball in the first place. That's part of what they're trying to do, build out their first party data. And so really, at the end of the day, all you have is everyone's got better data than they did before, but still the same few parties are best positioned to use it. And I don't know what that means longer term or where things go. Um, I don't think many people do, because now that you're not killing the cookie, I mean, it's more of the same, but it's not the same. The world is a little different. And overlaying cookie with first party data is a better solution than either or in silo. I think the one thing that seems clearest is the winner of all this is actually Meta, because when I said the best first party data, I mean, Meta has, maybe I actually should have put them second place to Google. Could even make the case that they're ahead of Google. Yeah, I mean, I'm kind of rambling a little bit on that, but it does seem very interesting that there are these really dynamic changes that are happening outside the scope of antitrust, but how antitrust feeds into decisions that are being made and not being made, and how they have actually tilted the structure of the competitive landscape significantly. And these changes have had major ramifications for market caps of very big companies. We're talking the biggest companies in the world, moving, trillions of dollars of market cap based around some of these changes. So I think, if there were one really big takeaway, it's that there will be big changes from here, and that will have really large consequences. I'm curious if you'd have any pushback on that, Daniel.
No, I would the future is unknown, but I would think it just, if we think about it this way, is competition for these companies is no longer really, arguably not even other companies. They're so big. The next thing in line is the U.S. government.
Yep, that's right. So I think on that note, it's been a pleasure having you on the podcast again. I think this is a really interesting topic. I think it's one we should visit again once we have some more solutions or some more information on what solutions would look like. And I'd be remiss to not draw back on our UK conversation and raise this one interesting data point. November was the first month of monthly inflows into the UK stock market in over 3.5 years. Do you think that was because we recorded a podcast in October on the very topic?
Well, considering some of these stocks I mentioned, there was one in particular that you would have said that was a terrible, terrible timing. But if that ends up being the case, I'll take it. We'll have to ask how much was the inflow? Was it a handful of us? We know who exactly was coming in, but
No, it's like a real inflow, which is interesting because there had been nothing but outflows, as far as the eye could see, and it was about a 300 million pound inflow. Though the prior month there had been a 1 billion pound outflow, so 1 month is only 1 month. But I do think that's a very interesting. I mean, the net switch is a 1.3 billion change in the direction of flows, and you got to start somewhere. So, on that note, I think we should wrap here. Thank you so much for joining us again, Daniel. This has been a pleasure, and we look forward to having you on again in the not too distant future.
Yeah, we'll have something a little more coherent to sort of talk about. I think we'll have some real remedies in both the cases, and we're going to see this is the light at the end of the tunnel. I don't think we've got years here to go. I think it's been years in the making. So I think we're going to have a lot of actionable discussion here in the next 12 months.
Awesome.
Well, thank you, Elliot and Daniel, for such a thoughtful discussion. It was a real pleasure, and I hope everyone listening enjoyed it as well. Till next time, goodbye for now.
Thank you for listening to This Week in Intelligent Investing, brought to you exclusively by MOI Global, the research-driven membership organization. Learn more at moiglobal.com.